Hey everyone, and welcome to This Explainer. So today, we are decoding a topic that gets, well, a pretty bad rap. Honestly, it's far too often completely misunderstood. When most people hear the word accounting, they immediately picture this tedious math chore, right? Endless spreadsheets, dusty calculators, and just a whole lot of boredom. But that couldn't be farther from the truth. Accounting is actually this incredibly dynamic, vibrant, and utterly fascinating system. It is, quite literally, the language of business. And today, we're going to learn exactly how to speak it.
Let's just shatter that old bean counter stereotype right out of the gate. The modern accountant isn't just sitting in some windowless back room hoarding receipts. Today's insanely fast-paced business environment has pushed accountants into some truly thrilling new frontiers. We're talking about forensic accounting now. You've got experts literally tracking down computer hackers and solving complex internet thefts that involve massive amounts of money. They're out there designing secure web-based payment systems for e-commerce and even tackling environmental accounting. It's a high-stakes world all about uncovering the truth.
Okay, so here's our roadmap for how we're going to unpack this fascinating system today. We've got 1. Beyond the bean counter. 2. The core accounting process. 3. Who uses accounting information. 4. 3 branches of accounting. 5. Traits of good information. And lastly, 6. The ultimate goals. Let's get to it.
Section 1. Beyond bean counting. Let's look at the really surprising history of where this all started.
Because to truly understand where we're going, we have to look at where we began. And the history here is wild. Accounting actually predates sophisticated writing. The seeds were sown as far back as 4000 BC in Babylonia and Egypt. They were using clay tablets to record wages and taxes, and Babylonia actually used it to uncover fraud and inefficiencies. By 2000 BC, China had developed sophisticated government accounting. Fast forward to 300 BC in India, and a minister named Kautilya wrote the Arthashastra, which detailed exactly how records must be kept. All of this happened way before 1494 when a Franciscan friar named Luca Pachoyo published the very first book on double-entry bookkeeping over in Venice.
So, over the centuries, that ancient practice of tallying marks on clay tablets evolved into the incredibly slick, continuous information system we rely on today. The American Accounting Association actually defines it as a continuous loop. It's a process that connects raw, real-world economic events directly to the decision-makers who really need to understand what's going on.
Which brings us to Section 2, the core process, the actual grammar of business.
So how does this continuous loop actually function? Well, it happens in 4 highly disciplined phases. Step 1 is identification. That's observing activities and selecting the ones that are actually financial in character. Step 2 is measurement, and this is absolutely critical. It means quantifying that event using a specific monetary unit, like rupees and paise. Step 3 is recording those measured events in strict chronological order. And finally, Step 4 is communication, turning that raw data into actual reports for management. The big takeaway here: if an event cannot be measured in money, say you make a brilliant new hire for a managing director, or you completely shift your HR policy, it simply doesn't make it into the financial books, no matter how important it is to the company's success.
Now, when we're identifying these events, we're generally looking at 2 totally different types of transactions. First, you've got external events. These involve an outside party. Think of things like selling merchandise to a customer, buying supplies, or paying your monthly rent to a landlord. But we also have internal events. These are economic events that happen entirely within the company's own walls. It's like one internal department supplying raw materials to the manufacturing department, or calculating the wages for the employees. Both of these types absolutely must be meticulously tracked.
Moving on to Section 3, who uses information? We need to look at internal versus external users.
Why are we gathering this absolute mountain of data in the first place? Well, we're serving specific groups of people who desperately need to uncover the economic truth about a business. We split these into internal and external users. Internal users, that's your management team. Think of a manager who needs timely info on the cost of sales so they can plan production schedules or decide on employee bonuses. They have full access to the raw data. On the flip side, we have external users, your shareholders, your lenders, your prospective investors. They do not have access to the day-to-day operations. Imagine you're an outside investor trying to decide whether to risk your own hard-earned money buying company stock. You have to rely entirely on those published financial statements to figure out if that company is actually healthy.
Section 4. 3 branches of accounting. Because different users have drastically different needs, accounting is branched out into specialized fields.
Think about it. An internal factory manager and an external bank lender are looking for totally different things. So we break this down into 3 main branches. Financial accounting is all about the past. It keeps a systematic record of past financial transactions to serve all stakeholders, especially those external ones we just talked about. Then you have cost accounting, which zeroes in on the present. It analyzes expenditures to ascertain exactly how much it costs to manufacture a specific product or render a service right now. And finally, management accounting is all about the future. It takes that financial and cost data and uses it to help internal management plan and make major strategic decisions for the road ahead.
Section 5. Traits of good info. At the end of the day, quality matters. Big time.
We can have all the branches and reports in the world, but if the information is bad, the business is literally flying blind. For accounting information to actually be useful, it absolutely must possess 4 vital traits. Number 1, reliability. It's got to be free from error and bias. You have to be able to verify it. Number 2, relevance. It has to be timely. Old, outdated data isn't going to help you predict future events. Number 3, understandability. The decision maker must be able to interpret the message exactly as the accountant intended it. No confusing jargon. And 4th, comparability. The data has to use common formats and units of measurement so users can actually compare the company's performance across different time periods or against entirely different companies. If it lacks these traits, honestly, it's just noise.
Section 6. The ultimate goals. Let's bring everything we've talked about together and look at why we do all of this.
What are the primary objectives of all this meticulous chronological record keeping? It all boils down to these core goals. We are systematically maintaining records so that we can accurately calculate whether the business actually made a profit or suffered a loss over a specific period. But hey, it's not just about profit. It's about depicting the true financial position, meaning the exact balance of assets you own versus the liabilities you owe at any given snapshot in time. And above all, the main goal is to clearly communicate this vital, synthesized data to the users who need it to take action.
Which perfectly sets up this incredibly powerful quote from our source text. Accounting is regarded as a language of business. It is the definitive way we communicate the economic reality of an enterprise. But, as we've learned today, we really have to remember its limitations. This language speaks strictly in terms of past, quantitative, financial data. It literally cannot tell you about the morale of the staff or the creative brilliance of a new hire because it only speaks in numbers.
So as we wrap up this explainer, I really want to leave you with a challenge. Stop seeing accounting as a boring math chore. It's a highly dynamic information system that tracks everything from ancient clay tablets to modern-day cybercrimes. If accounting is the ultimate language of business, you have to ask yourself, what story is your data telling? Is it a story of efficiency and explosive growth, or is it a story of hidden losses? The truth is in the numbers, folks, just waiting for you to decode it. Thanks so much for joining me on this deep dive. Keep learning, keep questioning, and I'll see you in the next explainer.